Hey folks, Dan Frio here. Today you're probably seeing that I'm basically not in my normal studio that I'm normally in. So I want to introduce you guys to a friend of mine. He's Sam Kwok of the Kwok Brothers. If you guys haven't heard of them, please check them out. They'll be in the description down below. They're a huge YouTuber and they're also in the financial markets and real estate. So with our goal here is to educate and inform you guys everything's real estate, but on the financing piece of this puzzle. But not only the finances, such as your mortgage and everything else, what we really want to focus in on right now, you're seeing your 401ks plummet. You're seeing the stock market crash. You're seeing housing basically crumbling at the point of cracking as well. So Sam and his team have a unique product to help you get out of debt faster, and it's actually tied to your mortgage. So that's why I wanted to reach out to him and his team to explain to you guys this whole concept, because I'm basically the conduit. There's not a lot of banks in the country that offer this product. There's only about 3 or 4, and I'm one of them. So Sam, welcome, and thanks for joining me today, buddy. You betcha. Yeah, so the reason why I had you on here is I want you to talk about, to my viewers, why your accelerated mortgage product or the AIO product is so... It's a product that I've never heard of, and I've been doing this for 30 years.
Yeah.
So tell everybody a little bit about that. That's why I came out to your place to explain to everybody out there, what is it and how does it work?
Yeah, so kind of set the backdrop of it. So what Dan's referring to is the Alma loan. We didn't invent it. I'm not that smart to have figured this out. But what we have figured out is the idea of being able to help you pay off your mortgage faster in as early as 5 to 7 years. But chances are you're asking, why should you want to pay off your mortgage in the first place? Maybe, you've worked with Dan or someone else last year or a year or two ago where the rates were really, really low, right? We've seen stuff as low as 2.5% I've seen. And you're thinking, well, I'm safe. I'm not going to pay a lot of interest anyways. So wouldn't it be just better if I left it alone, right? Or maybe you're on the opposite end of things where you just recently closed on your mortgage, 6.5%, 6%, wherever in the spectrum. But let me answer that question of why should you want to pay off your mortgage in the first place, right? I know a lot of you guys might be in your 40s, 50s, and 60s considering retirement. I know a lot of my own clients, their concerns are they get to 65 and they still have a mortgage or the mortgage payment's still cooking off. Now, here's why you need to pay off your mortgage as soon as possible, especially your own residence. And it has to do with the social economic behavior changes and how an amortization chart works. Now, Dan, of course, being a professional, he understands that, he gets it, he knows what's going on. But for many of you guys, you may have never seen what an amortization chart looks like. Right?
It's scary.
Yeah. So if you actually take a look at, and you can fact check me, check this out on your own, right, anytime. But if you take a look at an amortization chart, you'll notice there's two distinct lines there, right? You got your blue line, typically, which is your interest line, and you got your red line, which is your principal line. That's the actual balance you're paying off every single month. Now, when you send in your mortgage payment every single month, it's in 2 distinct components, interest and principal. Now, what's interesting is that in the first 10 years on your mortgage payment, a good chunk of your payment will go towards interest. This is called the front-loaded interest zone, where vast majority of the interest you pay happens really in the first 10 years. Okay, I don't know, a lot of you guys know that. Some of the common mistakes I see is a lot of people think they pay their interest linearly, meaning they pay the same equal amount of interest for 30 years. That's not true, right? If that was the case, then I would not do what I do today because, it's different. So the problem with mortgages is that you're paying 80% or 70% of the life of the interest you'll pay ever in your mortgage. It happens in the first 10 years. Here's another fact, right? This is something that a lot of people don't know, is according to the U.S. Census Bureau data, and this is based on 2010's data, the average U.S. adult here in the United States moves 11.7 times their lifetime. So if you extrapolate that, right, to, let's say you live to be about 80 years old, that's every 6 to 8 years equally distributed, you're going to move every 6 to 8 years, right? Which is good for you, Dan, right? Yeah. That's a lot of mortgage business.
Yeah, seriously.
Right? But the issue with that is you live in a house for 6 to 8 years, and let's say you decide to move, right? There's so many different reasons. I mean, when was the last time you moved, Dan?
30 years ago. So I'm a bad example.
Yeah, you're a bad example.
I'm a bad example.
I'm a good example because I just recently moved a couple months ago, right? But you probably have peers in your age that have moved
all over the place.
Yeah, a couple times, different places, different states. Maybe they have a new job. And that might be it because you're a business owner. You don't have to really be mobile.
I can't be mobile. Where I live is basically licensed and everything tags to my office, so I have to be local.
But for those that work for a job, different employers, or maybe your boss says, hey, I need you at a different part of the town, or I need you at a different state or a different country even, in some cases. So what ends up happening is you move every 6 to 8 years. Well, remember the whole amortization fact that I shared with you? If majority of the interest you pay happens in the first 10 years, and you add that fact to you move every 6 to 8 years, what ends up happening is you end up buying a home, brand new home, get a brand new mortgage. You're basically resetting that entire clock in terms of starting that process all over again. And if you do this every 6 to 8 years, you're essentially doing this, right? Over and over and again, where essentially you're stuck in the first 10 years of your mortgage for the rest of your life. I meet all the time people who are 65, 68, or even 70 years old, and they still have 20, 25 years left to go on their mortgage. I mean, they're gonna die with their mortgage, which is very, very sad reality. So part of my mission is to help homeowners in that scenario so that they don't have to be stuck with that. They can liberate themselves really through proper education and knowledge to where they can go ahead and pay off their mortgage in as early as 5 to 7 years. The beautiful thing is that it doesn't involve in paying an extra into the existing mortgage. They don't have to, quote unquote, necessarily refinance into a lower rate. They don't have to hurt their income, their credit, none of that. You literally just keep the things, your income stays the same. All we're doing is changing the tools and changing a little bit in terms of how we treat our money. And boom, now you get to save not only up to 70% of the interest on your mortgage, but now you're getting to pay it off in as early as 5 to 7 years, free and clear.
So let me preference you by how I found these guys. So I'm a YouTuber as well as they are, and just to find out some unique things between us. But one of the first videos I watched of theirs is how you can pay off your house in 7 years. And me being in the mortgage business, I'm like, okay, there's no way. There's no way it's even possible. So I watched this video and I'm like, that's intriguing. So then I subscribed to their channel. Then I start watching all their videos. Then I finally reached out to them to find out that Sam here he actually lives right down the street from me. I actually thought she lived in California. So I reached out to them, and their office is right down the street from our house. We are actually almost neighbors, so we got to know each other, became friends, and thus created where we're at today. So I'm basically their conduit into how we can get you into this program, but the educational piece is basically right here. You have to learn this program. I'll put a link right up here below. This is a link to their video, and the first video that I watched on how to pay off your house in 5 to 7 years. You're gonna be a skeptic as well as I did. So that's the whole concept that they're trying to teach. So basically, it's a line of credit that's tied into your checking account and everything else. It's an in-depth process. You have to learn it. So the best way to do this is to reach out to Sam and his team. It's the Kwok Brothers, and you're going to find all their information down below in the description. I'd love for you to reach out to them to discuss how you can pay off your house in 5 to 7 years. And if you're skeptical, you got to watch it. So we'd love to have you join us, join him in what they do and what their teachings are, because you're going to be financially set the rest of your life once you realize how important this piece is. And the best part is, we're working with Dan obviously to help you guys come up with a tool, because it does involve a specific type of a loan that allows you to do this. I often like to say mortgages are great. I mean, with this particular product or type of loan, I mean, you compare it to a mortgage and this particular type of financing tool we use, it's kind of like your mortgage is like a horse, right? Does it get you to places? Yes. But is it slow? Yeah. I mean, you're not going to get on a horse to get to, a 30-mile trip. That would take the whole entire day. But jumping on like a Lamborghini or a Corvette, that's going to get you places a lot faster. So think of it as like the tool which is the all-in loan that Dan's referring to, is like the Corvette. But that's another thing. And just like the reference I'm using is, should you get on a super fast sports car without any training? You probably shouldn't, right? I would not trust a 16-year-old to jump on a Corvette or a Ferrari and drive down the highway. No way, Jose, right? So just like how, even though you may have the tool, right, like a hammer or a chainsaw, you need to know how to use it. Otherwise, it becomes a weapon, it becomes dangerous. We don't want that. So, I mean, part of why we're making this video for you guys is to help you guys be aware of the problem, the solution, but also the tool that exists to help you guys pay off your mortgage in as early as 5 to 7 years. Yeah, and the reason why I was skeptical about it, I've been in the mortgage business, as you guys know, for over 30 years. I've never heard of this program. So then when I watch their video, I'm like, okay, this is intriguing. So I reach out to them as they're educating me on this. I was able to get set up with the bank that offers this program. Like I said, there's only a couple in the whole country that offer this. So it's not a widespread loan. So thus, nobody really knows about it. And I think it's a hidden secret from the banks because they don't want you to know about that. So Anything else? The biggest piece that I loved about this thing is how it tied into your checking account with your mortgage.
Yeah.
And it's a unique process where every time you make a deposit into your checking, it actually applies a mortgage payment basically in that. So you could say, okay, so let's say, example, you're sitting at home and you might have $5,000, $10,000, $15,000 in your checking account. You might have another $5,000, $10,000, $15,000 in your savings account. What's your interest rate that you're getting on that? Or the APR? 0.001 maybe? Maybe, okay?
Right.
So why would you have your money just sitting there doing absolutely nothing when you can apply it toward your house? So if you're intrigued with all this, I suggest that you click down below, click right above to learn their process and see the first video that I watched, and also reach out to the Quock team so they can help you.
Yeah.
So thank you so much for watching. God bless. If you don't like our channel, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Thanks for watching, guys. And don't forget to check us out on podcasts, and I'll have all the Quock's information down below. I need you to reach out to them so you can be financially stable the rest of your life. God bless, guys. Take care.
See you guys.
See you soon. Bye-bye.